In this video, we're going to look at 3 stocks that have earnings that are coming up, but not just any stock. These particular stocks that I'm going to show you today have had some pretty large and whale-like massive movements in the options chain in dark pool activity, which shows very strong confluence that these companies are going to not only beat earnings, but run in the coming weeks. You're going to want to take a look at these stocks. I'm going to show them to you and explain why they're strong and why you should be looking at adding them to your portfolio before earnings, because once earnings happens, these stocks are likely to crush again and run. Let's dive right in. First stock I want to take a look at here is Walmart. Now, a lot of people are talking about how Walmart is basically battling Amazon and that they're not really going to fare too well because everything's going online. Well, I want you guys to understand that Amazon is already losing this battle against Walmart, and I will show you exactly what I'm talking about. We cannot compare the numbers directly because Amazon has a bigger market cap. But what we're going to do is we're going to take the market cap of 2.42 trillion, and I've explained this to my students in Discord. We've traded Walmart a lot and made a ton of money on it. So what we're going to do is we're going to take the 2.4 trillion, and then we're going to take Walmart's market cap of 763 billion. So we're going to divide this by 0.763. We get 3.14. To make this easy, we're going to do 3.1. The numbers that we get from Amazon, we're going to divide by 3, and that's the number that Walmart needs to achieve. So total revenue, 650 billion. And then we divide that by 3.14. If we're going to do the exact number, Walmart needs 207 billion based on a per capita measurement. And when we do that, and we look at Walmart, we'll see if they can hit 207 billion. And they do. They actually have more revenue. Get that. 1/3 the market cap, more revenue. They actually have a lot more revenue, like 35 billion more revenue. So Walmart wins that. When we look at gross profit on Amazon, 319 billion, 319 divided by 3.14. Walmart needs to have 101 on gross profit, and they have 170. Again, almost double what Amazon has. We go to pre-tax income, okay? 25 billion, we can see it right there. Amazon is 75, so it's an exact science right there. The pre-tax is in line. Net income is 65.94. 65.94 divided by 3.14. So Walmart needs to have 21 on net income. And on net income, they have 19. So just a little shy on the net income. Let's go over to EBITDA. We'll look at the EBITDA here and we see 127 billion, 127.91. And we're going to divide this by 3.14. 40.7 is the EBITDA Walmart needs, and EBITDA has 42. So again, they beat Amazon in that department. When we look at the balance sheet, the net debt is 52 billion. So technically speaking, this is not really a direct correlation of these numbers, but Walmart technically should be like around 17 or 18 net debt, but they have the same debt. So that's not the greatest, although they have enough assets to cover complete liabilities and everything. Complete coverage here. As far as Amazon on their balance sheet, they also can. Okay, so we're going to look at Amazon's cash flow. 113.9 billion on Amazon. 113.9 billion divided by 3.14, which is 36.27. So Walmart's cash from operation activities in the trailing 12 month needs to be 36.27, and it is slightly higher. If we look at Amazon again, their trailing 12 month free cash flow of 20.81 billion divided by 3.14, Walmart needs 6.6, and Walmart has 13, which is almost 2.5 times the free cash flow in the trailing 12 month of Amazon. Amazon's most recent quarter, 8 billion in the negative. Walmart's almost $500 million in the positive. As of January of this year, Walmart is turning things around and taking the fight to Amazon. If we also look at earnings, Walmart has beaten every earnings. They've only missed 2 earnings. You can check it. They've only missed 2 earnings since the pandemic. In the last 5 years, they've only missed 2 quarters earnings, whereas Amazon's missed like 6. So we have to really let that sink in as well. They have much better numbers per capita. When we look at Walmart's price to sales, which is 763 billion divided by their trailing 12 months, 763 divided by 685, we have like 1.12. That is insane price to sales. That means Walmart very likely and probably in the next 3 to 5 years will 3 to 5x, and in the coming 10 years will 9 to 12x. because most price to sales figures that indicate and are literally indicative of potential future growth in the retail space is between 10 and 15. Walmart's at a 1. That shows you how much growth is on the table. And they have earnings coming up on August 21st, and they've missed only 2 earnings in the past 5 years. That means that they are almost guaranteed to beat earnings again. Walmart has been crushing it, and there's also been a lot of dark pool activity. There has been millions of dollars in dark pool activity, and there's been a lot of call options at 102 and 105 being purchased long for expirations on earnings week. So there's a lot of institutions and a lot of traders, whether it be retail or institutions, hedge funds, that are expecting Walmart to beat and run on earnings. Based on Walmart's numbers, their guidance, their growth, and the confluence that I have in technical analysis and where the stock has resistances based on dark pool data, I am looking at a price target of around 105 for Walmart on earnings. Between now and the end of August, 105 to 110. That already is a 15 to 20% return. If you plan on going long and holding a stock to take full advantage of its growth, Walmart by the end of this year is likely to be teetering and tipping the scales at 120, 130. And Walmart, based on its growth and the rate it's growing and the revenue it's generating, as well as how they're running their business, which I'm very much involved in every day. I'm a customer of theirs. I'm using their services all the time, and it's getting better and improving, and in my opinion, better than Walmart's. It is very likely that in 2026, this stock will be pushing in the mid 150s, 175. I totally see this stock going 2 or 3x in the next 2 years. This is a stock you want to add before earnings, though, because in the very minimum, you're going to be looking at some pretty hefty profits, likely going through the rest of this year due to the big institutions and the dark pool data that has been very, very strong on Walmart over the past couple of weeks. Another stock that you need to look at before earnings is Meta. There has been a lot of dark pool activity on Meta, and it's mostly bullish, and a lot of them are leap options going out to January, February, and June of 2026 and further. And there's a ton of sell puts at the 700 and 710 level, and there are deep in the money call options being bought, as well as far out of the money call options being bought. So when you look at this situation in the dark pool activity, you have 650 calls being bought long. Then you have 750 calls being bought long. You have 700 calls that are being bought for earnings. And then you have 700 puts being sold for earnings. That tells you there's a lot of confluence in the stock staying above 700 and running over the next year. And on top of that, a lot of dark pool activity has been hovering around the 700 to 750 mark, because Meta has pretty big resistance at 750 that it's likely to crush on earnings because of the data and because of their earnings history and their growth as an AI company, along with Oculus, WhatsApp, Instagram, and of course, Facebook itself. There's also been a lot of market share in the ads revenue that they've been taking from Google. This is something you really need to think about. So based on dark pool activity, their previous growth, previous earnings, confluence, dark pool activity, it is likely Meta is going to crush earnings. And in the event that it crushes and comes down in price, big money is betting on a big, massive move on Meta. You don't want to miss out on this. I gave my Discord Meta 700 calls going into August, and they are already up 75 to 100%. They purchased these call options when Meta was at 690, and now Meta was way over 700. And Meta recently went above 715, and I have students that took profit already on this trade in only 3 days. Screenshots right there of the profits my students have made, and of course, me putting out this trade. So Meta is definitely something you want to look at. Let's take a look at the financials, their previous earnings. This is a stock you want to look at before earnings, and you do not want to miss it. So looking at Meta, they have beaten earnings on the previous 4 quarters in a row. If we go to the daily chart, we can open this up and see that in plain view going all the way back to last year. Meta has not missed earnings. This is another reason why I love Meta, because they continue to evolve. Meta has not missed an earnings since February of 23. So it's been almost 2.5 years. Like, we're pushing into the 3-year mark. They haven't missed earnings. So they're very, very likely to beat earnings. And we have institutions, big hedge funds, big money that believes the exact same thing. When we look at market cap, 1.79 trillion, price to earnings is at a nice crisp 27.81, which is actually quite good. Anything under 30 is really good. 25 or less is damn good, and 20 is stellar. So they're really good. Price to earnings, really good. But we can gauge their price to sales so that we can see how likely they are to improve. We have 1.8 trillion, and then we're going to divide this by their trailing 12-month revenue, which is 170 billion, which is 0.171. So they have a price to sales of 10. Tesla's like 23. Apple's is like 11. So Meta is doing very well. They do have some room to grow. When we look at all of the numbers, gross profit, pre-tax, net income, it's all very strong. The previous quarter was a little bit less than the quarter before it, but if you look at a year ago, they've went from 10, 6, 5, 4, all the way up to 20 and 16. Meta's growing at a very rapid rate, and most importantly, their EBITDA is extremely strong. You can see the graph change right here. The last 2 quarters, Meta has accelerated growth. We look at the balance sheet, they have no debt. Meta has negative 20.78 billion in debt, and saying this word debt over and over again, I feel like Robert Kiyosaki over here. We're just gonna have like a debt sandwich, like a little sprinkle of salt on top and a glass of liquid debt. It's like, I don't know. I feel like I'm just talking too much about the word debt. But in any case, it's good when you have a net debt number of negative 20 billion because it means you have $20 billion in cash, which is exactly what Meta has. And they have a ridiculous amount of assets to cover liabilities. They have so much to cover and so much cash. They have an incredible balance sheet. In fact, balance sheets don't get much better than that unless you zero out the liabilities. And I don't think there's very many companies in the world that have this much cash stockpiled up and this much assets with no liabilities. This is a near picture perfect balance sheet. It literally does not get much better unless we're in a perfect world, that is. We look at the cash flow, 96 billion from cash from operation activities, free cash flow 52 billion a year. There are companies in the stock market that don't even have total revenue of 52 billion in 5 years, and Meta has free cash flow exceeding this number. In fact, Meta's quarterly cash flow, free cash flow, exceeds a lot of companies in the stock market's trailing 12-month revenue. Companies in the stock market that you're trading right now, their 1 year total gross before taxes revenue doesn't even touch Meta's quarterly free cash flow. Like I've said, this is a very, very good time to look at Meta. And if you took my trade on Meta back in March, I told everyone in March when the market was crashing, grab Meta at 485 and 500, sell puts, buy call options, buy leaps, buy the stock. You'd already be up 50% in 3 months. Meta is very strong, and I project that this company has the potential to 2x in the next 2 to 3 years quite easily. And especially with the options being as lucrative as they are, I would highly think about adding Meta before earnings. Before we get to the last stock that you need to take a look at and potentially add to your portfolio before earnings, if this is confusing you, maybe you're new to the market, don't know where to begin, I'm showing you all these numbers and shoving them at you very quickly and you don't know what to do with them. Maybe you can't digest all of this and you're just new to the market and don't know where to start and your head is spinning. I would love to help you grow your portfolio. The link to get started and join Discord is below. Let me unveil the truth of the stock market to you and turn those losses into wins. Maybe you've been trading for a little while and you just can't get it right. You're chasing these big green candles up, and as soon as you get into the stock, it goes down and you're like, why me? Why do I always lose money as soon as I get in? And then you make another trade, and as soon as you're winning and you get out, the stock runs and you're like, oh my God, why does this keep happening? Let me show you the psychology and the truth and the secrets behind the market and why you are losing. Remember, what you put off today for tomorrow, someone put off yesterday for today. Don't waste time. Don't hesitate. Link to join Discord and get started is below. Let me show you what you're doing wrong and let me change it now so that you can start growing your portfolio, save up for retirement, live the life you ultimately deserve. You can see the profits my students are making right there on the screen. We had all kinds of great trades this past couple of weeks. We've been making money consistently, and I have students that have been able to 2x, 3x, and 4x their account in less than a year. I have students that have grown from 15,000 to 40,000 in 3 or 4 months, and I have students that have done even better than that. I was raised Catholic to do the right thing. My parents are very hard on me for that. My parents run a homeless veterans program. They help veterans off the street, and I set out myself to help others in my own way. I love helping people. I'm not perfect. Nobody is, but what drives me every single day is helping people just like you and hearing their stories of growth. Link to join Discord is below. I look forward to seeing you very soon. So the next stock we need to look at is New Holdings. New Holdings is a fintech very similar to SoFi, and this bank is expanding worldwide and even into North America, into the United States and Canada. They're very big in South America right now, and they have a strong balance sheet. Let's look over New Holdings. There has been a lot of dark pool activity in the past 5 days on New Holdings. More specifically, last week there was a lot of $12, $13, and $14 call options being bought for August, and leap options going out to next year. So the institutions, big money, smart money, believes in New Holdings, and they believe that New Holdings is going to beat earnings and run, and they see the potential because they would not be putting their money there if they did not. And there was a lot of money, millions of dollars in dark pool activity upon millions on New Holdings. Let's take a look at the stock. So New Holdings has got earnings coming up in 22 days. They've missed the previous two earnings. They beat the two before. If we look at the daily chart, we will see going back that New Holdings has missed 1, 2, 3, 4 out of the last 5 earnings, which is not good. Actually, 4 out of the last 6, excuse me. But before that, they didn't miss any. So if we look at the history of this company since 2021, 6 earnings there, 7, 8, 9, 10, 11, 12, 13, 14, 15 earnings, 14 earnings previously. They've missed 4 out of 14, which is not that bad. If they beat this earnings, they're over 70%, and that's what we're looking for, and that's what big institutions and hedge funds are estimating and projecting that will happen. We noticed there's a lot of bearish divergence on the stochastics. There's a lot of greed. The breadth on the market is good, and the MACD is below. They're underperforming there, but we noticed that they're making higher lows and higher highs and holding steady at 1282. And the previous guidance that they gave wasn't the greatest, but it was okay. They didn't miss earnings by much. If we look at the earnings here, they only missed the EPS. Revenue is very important, but how they standardize their earnings is also important. So what we're going to do is look at that. We're looking at the financials on New Holdings. We'll see they have a 62.59 billion market cap. Priced earnings is good. We have 62.59. We're going to divide that by the financials, and we're going to see what their price to sales are. 62.59 divided by almost 11, 10.83. Price to sales of 5.7 puts it right where SoFi is. So if you feel like SoFi is going to grow based on price to sales, well, New Holdings price to sales is actually a little bit lower. Pretty negligible. It's 5.7 versus 5.9, but there is potential here in this space, in banking and fintech, for New Holdings to 3 to 5x. And that's just going off of standardized banking, like Bank of America, Wells Fargo. This is a fintech. This is different. And they are also in a different market. They're in South America and in Brazil and all over the world. In fact, they're growing a little bit faster than SoFi abroad and internationally. So when you look at these numbers, 10.83, pre-tax income of 3 billion trailing 12 month, net income of 2 billion. This is pretty strong. When you look at a stock like SoFi, which I'll show you in comparison, SoFi has a market cap of 23.7 and New Holdings has 62.62. So essentially they have to have 3 times the number, right? So if we divide that number again, 62.62, and we divide that by SoFi on a per capita, 23.71, like we did for Walmart and Amazon, they need to have 2.6 times the number. So if we look at New Holding, okay, 10.83 divided by 2.6, then we need to see SoFi's trailing 12 month of 4.16, and they don't have it, which means they're a little shy, which means New Holdings is outperforming on revenue. What about net income? Well, if we look at net income at 2.15 billion, okay, 2.15 billion divided by 2.6, we need to have SoFi around 820 billion on net income trailing 12 months, and they do not. They only have half, which means New Holdings is 2xing based on a per capita. So we compare market cap per capita side by side, New Holdings is outperforming. If you look at the balance sheet, assets cover, they don't have any info here on their net debt. So we'll go to cash flow. We already know that SoFi is doing very well with low debt. But if we look at New Holdings balance sheet and their assets to liabilities, it's 54 to 45 and SoFi is 37 to 31. So very similar, but you'd expect they're comparable. When we look at the cash flow, 6.58 year-to-date trailing 12-month on cash from operation activities. 6.58 divided by 2.6 means that SoFi should have 2.53, and they do not. Again, New Holdings is outperforming SoFi at a per capita. This is factual. When we look at free cash flow, it's not here, but in the most recent quarter was 1.51 billion. 1.51 divided by 2.6 gives us a 580 million free cash flow is what SoFi would need on the previous quarter. They do not. They have 323. Therefore, based on all of these per capita numbers, based on if we make them the same size, and based on their growth, New Holdings is 20% to 50% more growth and better numbers. In some instances, closer to 80%, like the revenue. So New Holdings, along with Darkpool Data, even growing faster than SoFi, which is already a great company. New Holdings, you can see why it's such a great stock and why Warren Buffett held in it since the beginning. He did get out. I don't know why. A lot of big institutions are in New Holdings, and if they beat earnings, it is going to be a very good ride the rest of this year. If they miss earnings, then it could pull back even more, but I'm a long-term investor myself. I have over 10,000 shares in New Holdings, and I will continue to sell put options and add to New Holdings. I really will. This is a stock you do not want to miss out on with earnings coming up in 22 days. If you can sell put options and get a sign below $12 or even in the $12.50 range, I would do it. I would even buy it at 13. I have thousands and thousands and thousands of shares with an average cost of 11, and I'm going to continue to hold. So if they beat this earnings and we get interest rate cuts in the coming few months and they beat the next earnings, I do not see it being out of the realm of possibility. In fact, I see it being very likely that New Holdings goes to 15 to 18 by the end of the year. If not, by the early next year, it will achieve that most likely. And going through next year, it would not surprise me if this time next year, in the summer of 26, that New Holdings pushing 25 or 30. There very much is a 2 to 3x in the next year potential on New Holdings. And since we are looking at this stock now, we can see that it really hasn't been much below $9 since last January. So pretty much above $9 is a very average low on my AVP. And right now it's at 13. So now it's time to get in, sell put options, try to get an average cost if you can of 12 before earnings. If you can't, just add in DCA after earnings if the stock should drop. There's so much runway ahead for New Holdings. This is the stock I would look at. And you know, there is other stocks with earnings coming up like AMD. I would really look at AMD because of NVIDIA and of course the relationship it has there in the AI sector with Meta and Microsoft also having earnings coming up. I would really specifically also consider as a bonus looking at AMD. I think AMD is going to absolutely crush this upcoming earnings. So you can take that as a bonus. You're going to want to look at AMD as your bonus fourth option. If you guys want more insight to like my stochastics, divergence, bearish, bullish, RSI, my DFib strategy, my AVP, my 3310 rule, and you want to learn everything that I have to teach and grow your portfolio like you see on the screen my students are doing right now, I would love to help you out. Do not put it off. Let me show you how to turn losses into wins. The link to join Discord is below. Do not wait. Do not hesitate. Let's take action right now. And if you don't believe me how well things are going in Discord, don't take my word for it. Let's take a listen to what my student Flute had to say. I'm here with Flute Ramon, who has joined my Discord most recently. How you doing, Flute?
Thank you so much, Corey. These 6 weeks have been the best weeks of my life. Thank you so much.
You're very welcome, Flute.
I started during COVID because I'm a musician and all my tour got canceled during COVID. And that's when I entered the stock market. And 2022, I think I came to options and that's when I started losing a lot of money. And I lost a lot of money, like 90K or so.
What stood out to you most about me in comparison to anyone else?
Because I always liked the retirement strategy. And you had videos on SPY, how to retire with 10K. That was one of my goals. If I can make 10K a month. And then I was in the webinar. 15 minutes down the webinar, I saw the truth in you. When you spoke about your story, I could literally feel the truth. Then I just booked a call. I didn't wait for the webinar to get over. I found the earliest date available, booked the call. Without a mentor, I cannot win this game. I was almost this close to give it up and then focus on my music. I got lucky that I found you. Very nicely you teach it. You make it very simple, to the point. Those lesson modules are not lengthy, very, very concise. And I think even a high school student should understand all your lesson modules. They're simple, so good.
What are you up since joining? You've been in this program for 6 weeks. Year to date, you were at a negative like $90,000 loss, which I've helped you pull out of. Share your experience.
The truth is in the pudding. Why don't I share my screen? Do you see my year to date?
$51,000, 26% in 6 weeks. is
Yes.
amazing.
Yeah.
And you were in the negative from negative 30 all the way to positive 51 in 6 weeks.
There's one more thing which I did not add. Hold on. Look at this. This is also I just switching from Schwab to Fidelity.
Even after all the losses, you've made almost 55,000 in 6 weeks.
Absolutely. Yeah.
Absolutely amazing, Flute.
You changed my mindset, and I am not scared looking at red. And the lessons I've learned from you this past 6 weeks have been a transformative journey for me. I owe all this success to you. It's because of your mentorship. Night and day, I can see like how I was losing and how you changed me. Everything changed after that, after your mentorship.
So you heard what my student Flute had to say. If you want this to be your success story, click the link in the information box below. I would love to help you and get started right now. I'll see you guys on the next upload or in the Discord real soon. One love, fam. Let's make some money.